Hey, this is Justin with daytradethemarkets.com. It is Wednesday. It's about 12:25 or so Eastern time, so a little bit afternoon on the East Coast of the U.S. And we have the FOMC announcement here in about 90 minutes or so. So I thought I'd use this time when the market's pretty slow right now to actually turn my connection off just so that the chart wouldn't move, just to kind of go through what we call market logic and look at an example today from the Russell, the TF, and just kind of talk about it bar by bar in terms of what the evidence is telling us. When we talk about market logic, we're always trying to tell the story of the market. Okay, so we're looking at what the evidence is telling us and then asking ourselves, okay, with this evidence, what should happen? And then did what actually happened or what is happening, does that match up with what should happen? If so, okay, great, we're in line, things are making sense. If not, then it's giving us other information that we need to adjust to. Okay, and there's a lot more that goes into it, but it's basically that process. So if we look at the Russell here early on here, we have early in the day, this blue bar is what we call a level 3 buying aggression bar. It means there's some extreme buying in the market, and what we would expect is that the low of that bar should hold, and if the buyers are strong, we should go and take out the high of that bar. And you can see that it bounced around for a while, but basically came down toward the low, tested at the high a bit, and then made new highs for the day a couple times. Okay, so that's what we would expect. The buyers are in control, and we would expect until something changes for the market to continue higher. Well, lo and behold, something did change. We had this level 3 extreme selling aggression bar, which is telling us that the underlying order flow and velocity and volume in the market is telling us there's a lot of selling that's coming in real time. It's extremely aggressive selling, and the fact that it's happening, again, this is a selling bar basically on the high tick of the day at that point. Market logic would say, okay, well, we had some buying that came in earlier, as you can see from here. Okay, we would expect the market to move higher, but now we've got some selling right on the high. In other words, the market has auctioned high enough to attract some pretty good selling. So the logic at this point would be we're at least going to probably test to the low of this level 3 bar, and if that gets taken out, we'll probably make new lows for the day. So the low of this level 3 bar is right here. That's where we would expect. When this type of selling comes in off the high, that's where we would expect the market to at least test to, because the market's kind of just testing point to point at this time. So we know that this is a really good area of support. We know this is really good selling. It's going to come down here, and it did test this, and it actually had a little bit of a bounce. But it couldn't, no buyers stepped in, we couldn't take it back up. So what ended up happening is it turned, after a little bit of a bounce, we turned back around and we took out and made new lows of the day on this level 2 or strong selling aggression bar. So what's the logic telling us? It's telling us that the selling that came in off of this high was stronger than the buying that came in earlier, and certainly the market's moved on each of those. And so now we've made new lows on this level 2 selling aggression bar. So we should continue lower until something changes. Right? We should continue lower. And so that's exactly what happened. It's very similar to when this buying comes in, it should continue higher until something changes. Here's where something changed. Okay? Now that we make these new lows, it should continue lower until something changes. Well, as it turns out, look at that. We have a level 2 or strong buying aggression bar basically on the low tick of the day. What is that telling us? That's telling us that, well, the auction at this point doesn't have a lot of conviction, and it has auctioned low enough to attract some good buying. Okay, so the expectation then would be, let's see what happens when we get back up to the earlier low of the day, which is basically right in here. Okay, and the market makes it up there. Has a little trouble getting through that, comes back down. But you can see at this point also, essentially we've got, let me just clean this up a little bit. Essentially what we've got here is some pretty good selling that came in off of the highs and some pretty good buying that came in off of the lows. Okay, so it's telling us this is a market that's tested both sides. It can't get much going. And until something changes, we would look at this where the selling came in. We would look at that area as probable resistance, and we would look at the high of this buying bar here as probable support. Okay, so again, the idea is the market moved higher, attracted selling. This is now basically seller territory until something changes. The market then auctioned low enough until it found buying. Okay, this is now buying territory basically until something changes. So you can see at this point, the market just kind of tested, basically to the high of this bar, came back down to that buying territory, made its way up with some pretty decent aggression, kind of climbed its way higher until it ran into this selling area. Okay, and now again, we're just kind of stuck in this no man's land between where good buying and good selling came in. Okay, I'm hoping that's making sense. Then we had an attempt by the buyers to push it higher. It didn't do, it didn't really have the follow through at first, but it shows that some buyers are at least trying. It then turned around and made new highs, took that out, made new highs here. Not on real strong aggression. I think part of that's just a factor of, just a function of the fact that the FOMC meeting is coming up. But normally, we've rejected, what you'd be thinking is we've rejected off of these lows. We've taken out these highs where sellers came in over here. Okay, if this was on like level 2 strong or level 3 extreme buying aggression, you've got to be thinking, okay, boom, I've got to go with this. And certainly it had a pretty nice rally. It's kind of just meandered its way, but higher. Again, though, you can see, let me clean this up again. I'm hoping this is making sense. If it's not, let us know. But again, here's the structure. Early buying, it was met with selling on the high of the day at the time. That sets up a pretty good area of selling pressure. That's where the sellers control. It auctioned low enough to find some good buying. That set up a good area of buying. So in other words, this is kind of our area of decision. Is the market going to be able to come down here again? Are the buyers going to step in? Whoops. Are the buyers going to step in, or are they going to make new lows? Okay. When we come up here, are the sellers going to step back in, or are they going to be able to make new highs? They were able to make new highs. So again, until something changes, we would expect the market to move higher. And again, that might not happen until the FOMC, and then it's going to go crazy, most likely, and we'll just see what happens. The point I'm trying to make is just it's so important, at least in our opinion, the way that we teach and the way that we trade, it's so important to try to make sense of the story of the market each day. Are we in a vertical or trend type of a day? Are we in a consolidation type of a day? Are we in a day that's testing and failing? Are we in a day that's having strong buyer control, strong selling control? And if you can make sense of the day, then you can, number one, avoid being on the wrong side of the market a lot more often. Of course, you're not going to be perfect. You're going to have losing trades. And then number two, you can get in on the right side of the market more often and have better location for your trades and know that you can hold those winners for longer if you're on the right side of the market. So hopefully that makes sense. Let us know if you have any questions on that, and we'll talk soon.